Liz Ann Sonders from Charles Schwab joins us now. She just got back from Asia. Liz Ann, great to speak with you today.
Thanks for having me.
So what was the mood like? What is the investor sentiment in Asia like these days?
So a couple of interesting takeaways, and I spent 2 days in Hong Kong. This is the business part of the trip. 2 days in Hong Kong, 1 day in Shanghai, and 2 days in Singapore. And because individual investors in Asia tend to be a bit more trading oriented, short-term in nature, there were a lot of questions of a short-term nature, especially on the technology sector and the FANG stocks. And when we discussed our downgrade of the technology sector in August, there was a lot of interest in what we were seeing then and what the likelihood was of us maybe putting an overweight back on that sector. But there was also a lot of interest in broader diversification, which is always one of our messages, which doesn't tend to be something that they focus a lot on. They do tend to be more individual security oriented, but they are a little more open to hearing about the benefits of diversification, especially as correlations come down and we move out of this global liquidity environment that really meant that diversification didn't help you all that much.
Liz Ann, do you feel like investors there in Asia are as concerned about the US-China trade story as we are here? We tend to focus, of course, on those individual headlines like we just played from Larry Kudlow today, and of course very focused on the G20. Same level of focus there or not?
No, I think there is focus. What was interesting about those many conversations that I had, and it was actually quite blissful in that there was very little of any kind of partisan or political angle on the part of the Asian investors when either asking questions about it or sharing their opinions about it. It was much more pragmatic in thinking about the impact on the U.S. economy, the impact on China's economy. Admittedly, a lot of questions on, are you as an American investor and strategist trying to get inside the head of the trade hardliners in the administration? What is your sense of what's going to happen at the G20? It was also interesting to hear their perspectives, especially when I was in Shanghai with members of the Chinese population weighing in on what they felt the calculus was on the part of the Chinese and where there might be offsets in terms of stimulus that could cushion some of the blow on China's economy.
Liz Ann, more broadly, where do you think this whole kind of trade issue as it evolves fits within the whole kind of puzzle of where the markets are right now cyclically? I mean, it seems like it's kind of being treated as a make or break issue for the economic expansion here, or at least risk appetite. So where do you think it does fit in, and where are we situated market-wise right now going into next year?
I don't know that I would call it make or break. I've been calling it a significant needle mover, at least in the short term, that defines not only market behavior, but also maybe the length of the runway between now and the next recession. Now, Larry Kudlow talked about a fairly limited impact on the economy, and that's a fact at this stage in the game. But if we end up going to the full amount, percentage-wise, 25% on the entire sum of imports that we bring in from China, you're looking at over a percentage point on GDP in an environment where expectations are that GDP slows back into the 2 to 2.5 range next year. That's a pretty big hit. And what that more than 1 percentage point hit to GDP does not incorporate, of course, are the ripple effects, whether through the confidence channels, through the inflationary channels. So I think the prospective impact on the economy on corporate earnings is more meaningful than the impact we have had to suffer at this point.
Liz Ann Sonders, thank you for joining us today.